Ladies and gentlemen, good day and welcome to the Landmark Cars Q4 and FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ronak Mehta. Thank you, and over to you, sir.
Thanks, Avirat. Good morning, everyone. On behalf of ICICI Securities, we would like to welcome you all to Landmark Cars Q4 FY26 earnings conference call. Today, we have with us from the management team, Mr. Sanjay Thakkar, Promoter, Chairman, and Executive Director, Mr. Aryaman Thakkar, Executive Director, and Mr. Surendra Agarwal, Chief Financial Officer. We'll start the call with a brief opening remarks from the management team about the quarter gone by. Then we'll proceed with the Q&A session. Thank you, and over to you, sir.
Thanks a lot. Good morning, everyone, and thank you, ICICI Securities, for hosting us. On behalf of the company, I extend a sincere welcome to everyone who has joined this call today. On this call, I am joined by Mr. Aryaman Thakkar, Executive Director, and Surendra Agarwal, CFO, and as well as SGA, our Investor Relation Advisors. The results and the presentations are uploaded on the stock exchanges and the company's website. I hope everybody has had a chance to have a look at it. Financial year 26 has been a good year for us, marked by multiple milestones and encouraging performance across key segments. On annual basis, we delivered 20% year-on-year top-line growth, ahead of the industry growth of 13%. One of the achievements we were particularly proud of is the performance of our after-sales business that crossed the milestone of 1,000 crores in annual revenue. We believe this places us amongst the select group of Indian companies across industries who have achieved such a scale in after-sales. After a slow first half, financial year 26 closed with 47 lakh passenger vehicles that were sold. This marks a 13% year-on-year growth. The GST 2.0 rationalization played a critical role in stimulating the demand by reducing the ownership cost and attracting customers who were previously undecided. SUVs continue to dominate customer preferences and remains a standout category during this year. India is the third largest market for passenger cars globally, behind China and United States, offering a long growth runway. Most of our partner OEMs, along with several global automotive players, are increasingly positioning India at the center of their growth strategy. The recent announcements by Honda, Renault, and Jeep bode well for the future. The India auto retail is entering financial year 29 on a very strong momentum. We are of the opinion that with current fuel prices, the EV penetration will significantly rise. Landmark's bet on OEs focusing on EVs is paying off big time. India's EV penetration in passenger cars is more or less 5%. For Landmark, the EVs contribute to over 21% of its sale. BYD, Mahindra & Mahindra, and MG Motors are leaders in their segments in EVs. Over the last 2 years, Landmark Cars had made significant investments towards expansion across brands and geographies. We are now entering a more consolidation phase where the emphasis is on optimizing operations and sweating our existing assets. The performance trajectory across key matrices give us confidence that this strategy has started yielding meaningful outcome. We are steadily reaching our historic profit matrices. The improvement is seen across various ratios as the newly opened outlets stabilize. For financial year 26, we have made the highest ever turnover, gross profit and EBITDA. There is a reduction in percentage-wise cost in both manpower as well as other costs. I feel confident about the future of the company with solid foundation and a very well diversified portfolio now under our belt. With this, I would like to hand over to Aryaman for his comments.
Thank you. The beginning of this financial year has seen the industry continue its strong momentum, with April showing a healthy volume growth. May has shown a similar trend so far. Due to foreign exchange fluctuations as well as global supply challenges, most OEMs have increased prices in April, with another price increase expected in June. This will help us with further improving our average selling price. Let me now give you a brief update on our OEM partners. Mercedes-Benz recently launched the all-new V-Class priced at approximately 1.4 crores and the new electric CLA priced at around 55 lakh rupees. Both these models have opened to strong demand with waiting period stretching up to a few months each. Deliveries for both have started from this quarter, the current quarter. In Q4 FY26, we increased the ASP of Mercedes to 73 lakhs, up from 69 lakhs in Q3 of FY26. This shows that the luxury segment continues to see a strong pull. Top-end vehicles continue to contribute approximately 20% of Mercedes-Benz sales. The launch of the new S-Class in June will further strengthen the portfolio and will be the first plug-in hybrid product of the brand in India. At BYD, supplies for the cars have started arriving April onwards, positioning us well to cater to the strong customer interest in these models. 3 models have now been homologated for the Indian market: the C-Line 7, the Atto 3 and the E-Max. BYD has also announced that they will be launching hybrid vehicles in India, which are expected to arrive later in this year. We expect BYD to continue its strong performance this year and substantially grow its volumes. Our Pune sales and service outlets will be operational in July, which will further increase our market share for BYD in the country. Kia's recently launched new generation Seltos has further strengthened demand momentum for the brand and is seeing an approximate 2-month wait time. The brand has plans to launch a few more products this year, which will further accelerate the volumes. Our workshop in Hyderabad, which got operationalized in March, has stabilized and is ramping up as expected. Deliveries of the Renault Duster commenced from mid-April and have garnered a positive response. A hybrid variant is expected during the festive period, which should further add to the demand. Under Renault's India strategy, this is the first of multiple new launches expected in India in the near future. Honda has announced its India strategy, where it is expected to stage a strong comeback backed by its 10 upcoming product launches, which will revamp its entire lineup. This year, the OEM has recently launched the new City and announced the launch of the ZR-V hybrid SUV and the Alpha electric SUV, which is also expected. Landmark continues to be Honda's largest partner in India. Stellantis has recently announced that they will be developing a new Jeep SUV in collaboration with Tata Motors, which will be developed in India and also exported. Going forward, India will become a key hub for developing and producing vehicles for the domestic markets as well as for international markets. JSW MG Motors has had a very strong year, with the MG Windsor becoming the highest selling EV model in India. This year too, the OEM will build on this volume by introducing 3 new models across EV, hybrid as well as ICE platforms. The first of this, the Majester, will start deliveries this month. MG Select, the premium brand of MG, has also had a positive first year, and they are also planning to launch one more model this year to further build on the volumes. Mahindra & Mahindra continues its strong momentum. The sales and service outlets have stabilized, and due to the strong after-sales momentum that we are seeing, we are opening a new after-sales facility in Hyderabad, which is likely to start operations in July. We believe that with BYD, MG and Mahindra as important pillars of our portfolio, we have a very good exposure to new energy vehicles. In light of recent macro events and the consequent price increases undertaken by various OEMs, Landmark has proactively maintained a higher inventory of new cars. This enables us to leverage the pricing advantage, ensure better availability for customers, and continue gaining from the healthy retail demand. We continue to leverage technology and have made inroads into AI-driven solutions in our operations to further improve efficiency, optimize costs, and enhance the customer experience. We have started with utilizing AI-based calling in our call centers and will expand to more use cases over time. I will now hand it over to our CFO, Surendra Agarwal.
Thank you, Arya, and good morning, everyone. I would like to share key performance metrics to illustrate our performance in this quarter and the financial year. Talking about our Q4 FY26 performance, I would like to highlight that our strong market presence and execution capabilities continue to position us as one of the largest volume contributors for multiple OEMs. During the quarter, the total pro forma revenue stood at rupees 7095 crore, representing a year-on-year growth of 18%. Reported revenue for the quarter came in at rupees 1279 crore, representing a year-on-year growth of 17%. Gross profit for the quarter stood at rupees 219 crore with gross margin 17.1%. Employee cost and other operating expenses were within the set internal benchmark at 4% of pro forma revenue. EBITDA for the quarter stood at rupees 79 crore, reflecting year-on-year growth of 30% with an EBITDA margin 6.2% on reported revenue. The growth of EBITDA outpaced the revenue growth. This reflects the continuous cost optimization and efficiency measures undertaken. For the quarter, depreciation expenses amounted to rupees 37 crore and finance cost stood at rupees 20 crores. The exceptional item for the quarter includes expenses written off in relation to outlet closure and relocation. Profit after tax was rupees 15 crore, a 758% growth year-on-year. The Q4 FY26 cash PAT stood at rupees 33 crore with margin of 2.6%. The average selling price of new vehicle stood at rupees 23 lakh. The ASP has increased on the sequential as well as year-on-year basis, mainly due to increased sale of high variant model for the majority of OEM. The average revenue per vehicle service stood at 30,072 versus 27,420 in Q4 FY25. Now moving on the annual performance. In FY26, the performance revenue grew by 19% year-on-year, translating to 6719 crore. Within this, New car sales revenue stood at 5,668 crore, registering a growth of 21%. Reported revenue stood at 4,896 crore, growing by 22% year-on-year. After sales revenue stood at 1,051 crore, growing 12% year-on-year. This marked the after-sale revenue crossing 1,000 crore mark on an annual basis. Gross profit for the period stood at 819 crore, translating into gross margin of 16.7%. The company reported its highest ever annual EBITDA of 283 crore with an EBITDA margin of 5.8% and continues to maintain cost discipline. The exceptional items for the year include a gratuity provision due to the new labor code and expenses written off in relation to outlet closure and relocation. Profit after tax stood at 38 crore, marking 120% year-on-year growth. Annual average selling price for new cars stood at 21.96 lakh versus rupees 20.79 lakh in FY25. The average revenue per vehicle service stood at 27,148. In financial year 26, the company generated net operating cash flow rupees 267 crore. The operating cash flow to EBITDA ratio is 0.94. We continue to prioritize cash generation in our operation. Additionally, the board of directors approved a dividend of rupees 1.5 per share for financial year 26 subject to shareholder approval as against 0.50 paid out last year. And this, we now open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Rahul Dani from Monarch Net Worth Capital. Please go ahead.
Yeah, thank you so much. So congratulations on a great set of numbers. So just a couple of questions from my end. Just wanted to get your sense now, how do we see profitability going forward? We set out to achieve close to 6% margin this quarter. We've almost reached there. In terms of gross margin also, we've seen good improvement. So what is your overall sense as to how do we see gross margins and EBITDA margins going forward? And also just want to understand, how do we see expansion of stores now? Do we see the pace coming off drastically over the next 2-3 years?
Yeah, thanks, Rahul. The way the world is today, as we see it, and as I mentioned in my speech, we have built good amount of capacity in the last 18 months. We now need to sweat these assets. So the expansion that we see for the current year, 2-3 years is a very long time. We want to kind of templatize what we have done so far. We rapidly grew, and now we have to demonstrate to everybody, including us, that we are able to get the profit back in the way we always did. So this is the year of consolidation. We will grow this year with one or the other things that are already there. Ariman mentioned about Pune, BYD happening, Mahindra workshop happening, one or two other things are in the pipeline. So the growth is a continuous thing that will happen. But the extra rapid growth that we saw 18 months back in one shot, I don't think that we are looking at this year. 2-3 years is a long time. The idea is to make and grow this company to a significantly larger scale than where it is today, and to make it profitably. So this is the year where we want to get the profits back, and we have been continuously working on all the matrices very diligently. In fact, the teams we are so much focused on cost you will not believe. So this is something that has gotten into our DNA. So we will have a profitable growth continue to happen, and you will see it this year. I hope I've answered your question, Rahul.
Sure, sir. And sir, just wanted to get some sense on after-sales service. We've had a great quarter with, record margins. The volume growth was just about 5%. So how do we see the after-sales business? Do you see this margin of 20%? Is it sustainable going forward?
See, what we have kind of said is that, and this question I was answering in a couple of calls back, where the margins had fallen below 18% in one of the quarters, which has been our 10-year average. And I was at that time saying that there is really nothing to worry, and when the workshops ramp up and things happen, it will come back. I believe that what we have done on a consistent basis is what one should look at, and not overtly look at this margin continuing. We will strive to do that, but we have a 10-year track record of where we are now for growth as well as margin. And you also spoke about the number of services. So our focus has been to sweat the assets more and get the ASP higher. That has been the philosophy of the company, whether it is car sales or car service, because that's where the maximum profit can come.
Sure. And just last bit, sir, what would the capex guidance for FY27, if you could call out that number?
So we don't have a very large capex in mind for this year. Historically, before we gotten into this rapid expansion 18-20 months back, where we spent more, I think our historic average is on around 50 crores. That could be taken as a ballpark, but I'm not trying to stick my neck out with a number, but it should be in and around.
Sure, sir. Thank you so much, and all the best, sir.
Yeah.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Hardy Jain from Investec. Please go ahead.
Hello, sir. Thank you for the opportunity and congratulations for your great set of numbers. Actually, I have two interrelated questions. So I want to know that how is the car servicing frequency and cost for EV versus ICE? And if the frequency and cost is low, then how do you see servicing revenues scaling with rising penetration of EVs in your portfolio? Hello?
Yeah. I hear you. Is there a second question, or should I answer this?
No, it was interrelated, sir. Actually, the question is, how is the car servicing frequency and cost for EV versus ICE? And if that frequency and cost is low, then how do you see servicing revenue scaling with rising penetration of EVs in your portfolio?
Yeah, sure. So what is important to note is that the servicing income includes, currently as well as in the future, it includes the accident repair work. Currently, around 47% of our service income comes from accident repairs. Now, the global studies have shown that the EVs, the cost of repair, as far as the accidents are concerned, which is paid for fully in most cases by the insurance companies, is higher than the ICE engines. The reason is that the battery, if damaged, need to be replaced and is unlikely to be repaired, and the parts are more expensive. So typically, globally, the after-sales business is not impacted that materially. There is an impact in after-sales business for EVs, but that is marginal. And I had referred to the Goldman Sachs report, which was published a few years back, and that had tried to see the impact of after-sales revenue on EVs versus ICE. And I think it was in the region of maybe 12, 13, 14% or revenue drop. That was something which was seen because the accident repair remains constant. The value-added services that we do, polishing and interior cleaning, the tires, the seats, the brakes, all are constant. So this is the global study, and we will have to see how things pan out in India.
Okay, understood, sir. Thank you.
Thank you. The next question is from the line of Ajok Frederick from Sundaram Mutual Fund. Please go ahead.
Hi, sir. Thanks for the opportunity. So primarily on the demand outlook, do you expect demand to kind of weaken a bit as all the OEs are taking a price hike? You can give a broad stroke, probably a premium end and mid-end and the EVs. So some color on the outlook on pricing impact.
Yeah. So, if we were not reading the newspapers, we wouldn't have realized that there is a war on. So, I mean, we are also positively surprised by the resilience of the demand so far, except for commercial vehicles, where we have seen some kind of hesitancy in the last 8-10 days. And some supply challenges in one or the other OEs, the demand remains to be fair so far. I hope that this is how it pans out.
Okay. And among your customers, can you highlight like who have taken the most price increase and who is yet to take it?
You are talking about the OEs that have increased?
Yeah.
Yeah. So this is continuous, my friend. Every 2 months we are, Mahindras have announced that they are taking a price hike. Honda already did. We had MG and MG Select increase the prices. Mercedes has increased the prices because of the Forex. So this is something which is ongoing, so it will be difficult to quantify. I don't think anybody who has not taken it.
Okay, great, sir. My second question is on your inventory build-up. Sir, how do we intend to benefit out of this? It's just a supply chain management, or can we make the gap, or can we get some benefit out of this inventory due to price hikes?
So it is not a build-up. It is a market. In fact, that 36 days is what we were 2 quarters back.
Yeah.
So we had kind of consciously decided to go down and down. But in March, we realized once the war had started that the price hikes were imminent and there could be some supply chain disruption. That's what the fear was at that time. So we kind of did not want to go down below that 30 mark where we were, and we built up slightly. I wouldn't say that we are in the process of building more inventory anymore. We will be there in and around. This statement is more to say that how do we benefit? The answer is that when the price increase happens, we are able to sell it at the new price. So that's the benefit that we get on holding the inventory.
Okay. That's a good positive. So finally on BYD, you mentioned about a few models being homologated. So these will be in the CKD route, which will be coming in?
So currently they are in the CBU route. And that's how the products are. We are hoping and waiting for the CKD to happen over a period of time.
Oh, okay. Even Atto 2 will be through CBU, is your expectation?
Right now, everything is under CBU. But the number cap goes away. So after paying the duty, there is otherwise a cap of 2,500.
2,500, yeah.
Which doesn't apply if you get it homologated.
Got it, sir. That's very helpful. Thank you. That's it from me.
Yeah.
Thank you. The next question is from the line of Bhargav Buddhadev from Ambit Asset Management. Please go ahead.
Yeah, good morning, team, and congratulations on a good set of numbers. Sir, my first question is that if you look at your revenue in after-sales per vehicle, the realization has increased to about 30-odd thousand, and that's a substantial increase Q-on-Q as well as YOY. So any particular reason why we have seen such a sharp increase over there?
It is also, Bhargav, due to the bonuses that we get from OEs to meet if we were to meet our quarterly or monthly or annual targets. So that also is accounting for it. But we are, as you will see, we are continuously trending upwards. There is also an increase in spare part prices, which the OEs have been taking because of the metal prices and the forex, which has happened. So that also plays out and will continue to play out.
Okay.
So just like car prices, spare part prices also increase.
Okay, understood. Secondly, sir, is it possible to know what is the capital employed deployed in this after sales? Because ROC here will be substantially higher, and given the fact that a large part of your expansion in your garages was relatively recent, obviously the revenue in after sales was subdued, but now that ramp up happens, is it fair to say ROC can come back into double-digit trajectory?
Yeah. So, Bhargav, that's the endeavor. That's what I said at the beginning of the call, that this year is where we are trying to strive to get all our matrices to where they belong. Now it's and again, I would kind of urge everybody over here to not look at it only quarter to quarter, look at the trajectory. And this is a business which, if it is looked at over a year or a longer period than quarter, it will always be more helpful.
Sure. And lastly, sir, yeah.
Haji.
Yeah, sir. No, you were saying something.
No, go ahead, Bhargav.
No, sir, lastly, I was reading somewhere that Mercedes is likely to come up with record new launches very, very soon, maybe this year or maybe over the next 2 years. Is that information correct, sir, for India?
Yes, this is Aliman here. Yeah, that information is correct. Globally, they are in the process of completely revamping and launching products. They have announced that this year onwards, globally, there will be 40, which is 40, new products that they will be launching over the next few years. And India will also see I think the product onslaught for them in India will begin possibly from next year. And we should also see some benefit of many of those products coming here.
And is this mainly because they have lost some market share to the likes of, say, BMW and all? Is that the reason?
No, I think it was anyway. So most of these OEMs follow a product life cycle, and right now Mercedes is in the beginning of their new product life cycle, which is why they have a large number of cars coming up in quick succession.
Okay, and does that also mean that they will increase the pricing range, meaning they will also reduce the pricing range to accommodate more customers or increase the TAM?
I won't necessarily say that. I think there will be, apart from revamping the existing lineup, there will possibly be other products also which will come across the price point. I think Mercedes has been focused on selling higher value cars. So number is of course one way where they have retained and maintained their number one position for 11 years. But at the same time, they've been consistently increasing their top-end vehicle penetration. So value-wise also, the car sales are going up.
Sure. Great, sir. Thank you very much and all the very best.
Thank you. The next question is from the line of Vijay Pandey from Axis Capital. Please go ahead.
Thank you for taking my question, sir. Couple of questions I had. So, given the macro dynamics going on, and OEMs feeling the pressure of raw material headwinds and other things and margin pressure. So how do you see the dynamics between you and OEMs being played also? Are we able to manage the margins which we have with the OEMs? Is that little bit negotiation going on? Like, how should we look at it? That just wanted to get your idea on that.
Yeah, Vijay. So this is an interesting question. So far, we have had no discussion with any OEM about renegotiating our margins as such. So if the prices go up, we tend to make more money per unit. That's what it is, but one will have to wait and watch how that kind of trends out.
Okay. Second, sir, so you said that the ASP per unit that has gone up because of because of some benefit from the OEM for the target achievement. So do you expect the ASP to increase going forward from again going forward, or
can you, Vijay, repeat? Your voice has been a little faint. I'm not able to exactly understand what you're saying.
I wanted to just check whether your expectation on the ASP for the vehicle. So, do you expect it to so it's currently at around 30,000, 30 to 33,000. So, just wanted to check how do you see that EBITDA per vehicle?
So over a period of time, Vijay, it will keep on increasing. I cannot comment on the pace or the timing of this increase. Over a period of time, because of where our currency is and the inflation is, things will keep on increasing, and that's what you would have seen in the last several years that we have been publishing this number.
Okay. And lastly, sir, there was some news that Volkswagen has kind of reduced has stopped some stores from Landmark. So is that true, or just that was more of a rumor news?
So what is happening, Vijay, is that we continuously evaluate our portfolio and the store level profitability. Of a particular Volkswagen location that you may be mentioning to was not profitable for us for some time now, and we did not see that happening anytime soon. So there was no point burning money, and so that call has been taken. Now, on the same breath, I can say that we are with Volkswagen in the state of Gujarat, where we continue to be their only dealers, and those are profitable locations that we have continued. We may decide based on the demand and supply as to the number of outlets that may be required, but we are also mindful of the investments that have been made and the written down value of that.
Okay. So, thank you, sir, for taking my questions, and all the best for coming quarters.
Thanks, Vijay.
Thank you. Participants who wish to ask questions may press star and one at this time. The next question is from the line of Dheeraj Kaswan from InCred Capital. Please go ahead.
Hello, management team, and many congratulations for a fantastic set of numbers. So, let's come into the first question. I would like to ask that the current quarter has been quite transformational for us. We had a very high growth. It was the highest EBITDA that the company achieved, and also a very good margins if we see in the past 8 to 9 quarters. And we also saw that the PAT has also been the highest in the past 9 quarters, which was our best year in FY 23 and 24. So are we expecting that this next year to be on the same path? Because it's structurally we are very well positioned right now like all the outlets that we have opened in FY23 and 24 yielding results for us, and we don't expect any kind of cost or any surprises next year onwards. Is that correct?
I mean, this is my hope also, Paswan. We have done what we have to do, and this is the time to reap the benefits. So, unless something happens on a macro basis which is beyond our control, we are well poised for better results. The seasonality factor, of course, need to be kept in mind, where the auto industry is the last 2 quarters are generally the better quarters, though we have set a base for now what we can do. We are keeping our fingers crossed for a much better year.
Okay. Yeah, I mean, just like in this year, there were some issues due to inventory pile-up due to the new GST rationalization. We had to clear out some inventories. There was some pressure on the margins. But next year, I don't think any such thing is a possibility, and mostly it should be quite predictable. And also, I think there's quite a lot of headroom for like just organic growth from a lot of our outlets, which are not very like highly utilized right now.
Yeah, so the opportunity that we are kind of fortunate to look at is immense. And one of the earlier presentations we had mentioned that the largest auto dealerships across the world, in China, in US and all, contribute maybe 2.5% of the entire auto sales, and we are not even there. We are not even halfway there. So while the industry will grow, the opportunity to set up, acquire dealerships is not going anywhere. So what we have been able to demonstrate in the last maybe 2 years is that we are at will able to get the growth. What we will now demonstrate is that we are able to have that growth and do it profitably. Now that is the template that we want to kind of set.
Okay, great, sir. And I just have 2 last questions. One of them is that in BYD we saw that there were some issues regarding inventory, and even in the if someone is checking Vahan, they can see that BYD was struggling with sales in the 4th quarter, but in 5th quarter we are seeing that maybe the inventory has come up now and they are doing very good sales, and maybe this May month will be their best ever monthly sales. So are we seeing that from here on there won't be any inventory issues and we will be able to service all our clients?
Yeah, so in the last quarter, what had also happened is that they had run out of their quota of cars which were not homologated, so could not be imported. Now we have a new year which has happened with new quotas, but the good part, as Aryaman mentioned, is that most of the cars which we sell are out of that quota system. So this should be a much better year for BYD.
Okay, great, sir. Thank you so much for asking all the questions, and good luck to you. Thank you.
Thank you. The next question is from the line of Jay Prakash Kumar from Corman Capital. Please go ahead.
Hello. Hi, sir. You just talked about your ASP increasing, and I think you talked about per unit profit increase.
I'm not able to hear, Jay Prakash. If you can please say it again.
Yeah. Can you hear me, sir, now?
Yeah, it's better.
Yeah, sir, you just alluded to ASP going up and you will be benefiting more. So if you can just give an example, like what is your, how do you really benefit from it? Is it a cost plus or margin? What is it? And another question related to it is, sir, because there was a GST reduction, right? So does it mean that your margins got impacted because of GST reduction and ASP was lower in last couple of quarters? And will it basically whatever the ASP increase will happen will make up for GST reduction as well? If you can just help on that, sir.
Yeah, so Jay Prakash, as far as the GST reduction is concerned, there was no impact on the stock of cars, because then it is the question of input and output. What we had mentioned in our second quarter presentation, that the challenge was in the cess, which matter is now with the Supreme Court. So the GST, the way it was designed was that on top of 28% GST, there were various of cess, compensation cess. Now that is a little complex matter, but there is no cess on vehicles anymore. So reduction in GST per se had, except for say a test drive or a demo cars that we had, we did not have much problem, but we had to liquidate cars which had a cess in that quarter. Now, how do we benefit from a price hike? Is that the manufacturer, for example, has a selling price to us at 100 rupees, and we are selling to the customer, MRP is at say 106 rupees, just as an example. By a price hike, what it means is that the OE will supply to us at say 102 rupees, and the MRP goes to 108 rupees. So the stock that I am holding at 100 rupees, I am able to sell it at 108 rupees instead of 106 rupees that I would have done otherwise. How we benefit.
Okay, sir, but that is just when this previous cheaper stock gets sold, right? So that's how.
That is right. So it's a one-time gain for the stock that we are holding, not otherwise. It's a one-time gain. For only the inventory that we would be holding.
Got it, sir. I thought you are, let's say, margin kind of a business where you will, let's say, you will retain, let's say, 6% margin. So that's
the margin would also increase if the margin is on 100 rupees, say 6 rupees, then on 102 rupees it would be a little more that way. But that's a marginal increase, not material.
Got it, sir. But this is just for the stock you are holding, not for the new ones, right?
Yeah. So once this is done, we will be back to the earlier 30 days or lower desire.
Okay. Got it, sir. Thank you.
Yeah.
Thank you. Participants who wish to ask questions may press star and one at this time. The next question is from the line of Nilesh Doshi from Prospero Tree AMC. Please go ahead.
Thank you. Good morning, sir. Thank you for the opportunity. Sir, my question is related to the Vahan portal shows that the BYD sale is growing month on month, but the Mercedes sale is either constant or reducing. So how is our performance related to these two OEMs, sir?
So BYD, there is nothing to answer. It is basically a supply issue, and once you have the vehicles, then we are able to sell. The Mercedes, the ASP has continued to rise, so one can measure the business growth in either numbers or in units sold. So Mercedes has been focusing on per car realization rather than pure numbers, but they have announced, and Vahan would have a lag. One or two states which were not on Vahan, I think they are getting in Telangana and one other. So this is something which is in everybody's sight, and we believe it's in a good zone.
But do we
ever a year for March end.
But do we maintain our market share for these two OEMs, sir?
Yes, our sales team for all the brands look at, because now Vahan is so widely available and used, so we also track what happens.
And sir, last question. One of the promoter has indicating that
Sorry, what? Can you please repeat?
Sorry to interrupt, Mr. Nilesh. May we request you use a handset to ask a question?
Hello.
Please go ahead with your question, Mr. Nilesh.
Yeah. Sir, one of the promoter has indicating that he wants to identify himself as a non-promoter category. So can you inform who is that promoter and how many number of shares he is holding?
So there was no promoter holding over there. There was a kind of a family separation which had happened, and that's why it is that promoter was not holding any shares.
Okay. Okay. Thank you, sir. All the best, sir.
Yeah.
Thank you. The next question is from the line of Harish Singh from Shubh Labh Research Private Limited. Please go ahead.
Hi, Mr. Thakur. Greetings. Thank you for the opportunity. Mr. Thakur, most of my questions are answered. I hope I am audible. Most of my questions are answered. I have one question on our standalone numbers, which is major chunk of our profits, probably driven by our Mercedes business. Now, if I look at past few quarters, unfortunately, the profits there were declining. We reached up to 7 crore of PAT there. But this quarter, again, we are seeing, a substantial jump from 7 crore to 12 crore. So the best of the quarters was actually having a lower profit, whereas now we have revived it back. So I just wanted to get your opinion on how this number will trend going ahead, given the kind of launches Mercedes is planning.
I think, as I mentioned maybe around 20 minutes back, it's best to look at the business on an annual basis rather than a quarterly basis, because our targets, bonuses, sometimes get kind of pushed to one or the other quarter, whether it is sales or after sales. So we are, as of now, confident of practically all our portfolio that we hold, and the profitability will be good across.
Understood. And in these 40 model launches planned by Mercedes, will India get all the 40 or will get a lesser number there?
This is Aliman here. No, we are unlikely to get all the 40 because there are certain models which may be specific to international markets. But we do expect that a large number of them will make their way to India.
Got it. But still at least 20, or they have not disclosed that to us?
No, it will be difficult to put an exact number to it, but we do expect a large number will come here.
Got it. No, this is helpful. Thank you, Mr. Thakur. Thank you, Aliman. Good luck.
Thank you.
Thank you. The next question is from the line of Vijay Pandey from Axis Capital. Please go ahead.
Sir, thank you for a follow-up. Just wanted to check about how do we plan to reduce our debt? I see that we have lowered our debt.
So your sound is very faint. If you can come closer to your...
Is it okay now?
Better, a little better, yeah.
Sir, wanted to check if we continue to lower our debt. This year we have reduced our debt, so just wanted to get your sense of the same.
So let's have Surendra come in now.
So this year our interest-bearing debt is reduced by 27 crore, Vijay. And we are expecting, and we generated 267 crore operating cash flow, as you see in the presentation. So we are likely to generate a good cash flow in the coming year as well. So our debt is going to reduce. Only thing is, if we expand, then there might be some uses of the debt. We might require additional debt.
Okay. Thank you.
Thank you. Participants who wish to ask questions may press star and 1 at this time. Ladies and gentlemen, to ask a question, you may press star and 1 now. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thanks to the team of ICICI Securities for hosting us. At the closing, I would only reiterate that this year is the year of consolidation, where we will reap the benefits of whatever hard work that has been put in for the last 1.5 years. The company will continue to focus on costs. The company will continue to generate good profits and go for all the matrices that are important to run the business. And we hope and believe that the Indian growth story is intact and is kicking. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.